Among tertiary markets in the Midwest or the Northeast, there aren't many bright spots these days, but one notable exception is Grand Rapids, Michigan, which stands out with some uniquely healthy demand drivers for a market its size in the Midwest. Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons with a Grand Rapids update. At this point in the cycle, we're getting more and more questions about secondary and tertiary markets as investors and developers are increasingly chasing yield. In some parts of the country, there are more options than others. In the Midwest, there aren't very many at all, so it's more slim pickings. But one of the more attractive options increasingly looks like Grand Rapids, Michigan, one that's probably off the radar for lots of folks. But few markets of this size have produced this kind of job growth recently. Looking at this chart, you can see remarkable acceleration in the last few years. Grand Rapids is enjoying its best economic hot streak in more than 15 years. This market has consistently produced year-over-year gains of around 15,000 jobs since the latter part of 2011. That amounts to a growth rate north of 3% annually. That puts Grand Rapids in rare air. Not many spots outside Texas and North Dakota are consistently putting up those kinds of numbers. And what's impressive is not just the total number of jobs being added, but also the types of jobs that Grand Rapids has added. Grand Rapids has an attractive economic mix for a market its size, with strengths in healthcare, advanced manufacturing, agriculture, alternative energy, life sciences. There's a large biopharmaceuticals hub here, also a large public university. And unlike much of the Midwest, Grand Rapids also has some solid tailwinds like good incomes, younger demographics, and for what it's worth, local promoters also like to point out they have a low unionization rate relative to their peers. Now, with all these drivers and with little new construction, apartment occupancy is very tight in Grand Rapids, number 2 nationally among the core 100 metros at 98.3%, behind only Madison, another attractive tertiary market, one that's probably better known and harder to get into. Occupancy has been consistently tight in Grand Rapids since the second half of 2011, averaging north of 97%. Rent growth has slowed a little bit, but still was solid at 2.8% year over year as of Q2. Prior to that, Grand Rapids had been averaging growth around 3.5% annually throughout this cycle. Now, all in all, Grand Rapids is still a tertiary market, but if you're chasing yield and looking for something that's a little off the radar, Grand Rapids might be a fit. Now, we do expect economic growth to slow down. You just can't sustain a pace like this forever, but the drivers here appear stable enough to allow the apartment market to remain in good shape for the foreseeable future. And that's going to wrap us up for our Q2 reports. Beginning next week, we're going to start talking about Q3 results, and we're going to start off by talking about what's going on in the U.S. apartment market, an overview of our Q3 survey. And that wraps us up for today. So until next time, for Apartment Market Dynamics and MPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, MPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.